Good morning, everyone. It is Wednesday morning, March 28th. It's around 7:30 a.m. Eastern Time. Taking a look at the U.S. dollar index. This is a 4-hour chart, and we're zoomed out about 6 months here. You can see we're starting to form a little bit of a possible head and shoulders pattern here. And we've got this support neckline. Now, we came down to the support neckline the last couple sessions. Pretty much came right down, tagged it, and we were looking for a bounce, which we got a very small bounce. If we just zoom in here, you can see that we had a bounce yesterday, and of course that bounce in the dollar put a little bit of selling pressure on stocks and commodities, just as we kind of expected. Now, in overnight trading, we've seen the US dollar start to come back down to this neckline, and if we do break this neckline with some strength behind it, then we've got a couple different key support levels. There's going to be a possible little double dip here to the 78. There's going to be a pretty key level around 77. And actually, if we just zoom out a little bit more here, you've got a pretty major level at the more or less the 76.50, which are these previous highs. We've got previous pivot low, and this level here would be a pretty significant pullback to the 76, which is pretty far away. If the market does go that way, it'll probably take a couple weeks to get there, and of course we'd see stocks and commodities rally, and that would bring us most likely into May, where we could get a very strong bounce from there. And of course the saying is sell in May, go away, so that could take place with the equities market. But overall, we're still holding up on this neckline. We are coming down to it this morning. We'll have to see what happens. If we get a breakdown, we're going to see stocks and commodities probably rally in the near future if the US dollar breaks down. Now, taking a look at the crude oil chart of how it's affected with the weaker dollar this morning. Crude oil's just been holding up in this little pattern here. Overall, it's got key resistance right across around this 108 level is kind of the key resistance. It's been forming this kind of rounding kind of bottom here and working its way up. Once it breaks 108, it's most likely going to pop to 110. And we've got longer term resistance at 114 after that, which I think would put in a top for crude oil. It'd be a good measured move from this recent move up. We'd see a run all the way to 114, which would be the next measured move to the upside. So I am starting to like crude oil a little more here. We're starting to get a little bit of a pullback, and the more it pulls back today or this morning, the more opportunity, the more potential there is for the upside, as there's going to be resistance at 108, 110, 114, but the lower it is now, the lower these pivot lows are for putting in a stop. So I am looking to get long crude oil, and maybe doing that this morning. Looking at gold, here's a 4-hour chart of gold. Gold had a nice breakout of this more or less bottoming pattern as volume declined. We were making lower lows, and it kind of had that distinguished kind of bottoming kind of pattern unfolding. Since then, we've seen a strong couple surges to the upside, and we've got resistance here, which was broken, these previous highs, and once it broke that, it kind of paused there, and or didn't really break it yet. It paused underneath this key resistance level and then finally bounced above it. So we had a nice move up, starting to get a low volume pullback. Again, we've got support down here, and it looks as though the next stop for gold is the 1720. If that can be broken, then the next move after that will be probably a little consolidation, and then probably the 1780, 1800 range, which is this next pivot high in the market. So that's kind of what I'm looking for there. Got some nice bullish price action on gold, and maybe getting long precious metals here very shortly. Looking at gold mining stocks, the GDX ETF, it sold back down yesterday. The gold mining stock juniors sold down pretty sharply yesterday, over 3% to the downside. So the gold stocks remain under pressure, and when there's any weakness in gold, you see these stocks just continue to erode in value. So I still feel as though it's trying to put in a little bit of a bottom. And I pointed out the last couple trading sessions, it usually starts to get a little choppy. And if you notice a lot of previous pivot highs and pivot lows, you'll notice how when you'll start to get choppy. It looks like it's bottoming. It's it's come into a support zone from previous level. A lot of people try and get in there. What you really want to see is you want to see multiple lows. There's a lower low here, lower low there. You get a bounce, and then of course you get a lot of people piling in thinking that's support, and then of course they all pile in, and then it rolls over and shakes them out with a lower low down here, and then another day it even go gaps lower, and this is the exhaustion. This is the flush out. This is everybody who tried to pick a bottom and then gets taken out of the play, and that's when you get this flush of shares moving out, and that's the actual bottom, and from there you start to see it move up. Same for the upside. It looks as though you're coming into a resistance trend line, and you start to see a little bit of chop. People start to short it, but then you make a higher high, and then a couple days later you make another higher high, shakes people out, and then the market heads lower. And again, same here, you're back up for resistance, people short it, you end up making another higher high, starts to pull back, people put their stops in above the previous high, and then of course you get this next high that just pierces a little bit, shakes you out of the trade, and then you see it fall to the downside. And that's more or less where we're trading, I think, right now. If things play out in that way, we're seeing a lot of people try and get in here at the bottom. We've made a new low, which is pretty nice, but overall a lot of people were piling in. I got a lot of emails of individuals jumping into GDX. If we do get a squeeze lower here, it's going to shake most people out, and then from there we would actually see a strong rebound in GDX. But overall, gold and silver look like they're ready to bottom, so we may actually see, we might not see this lower low. We might see it actually just hold up here and actually start to move higher. But that's how you usually see tops and bottoms form. Usually when you first see a bottom or top forming, it'll usually continue to squeeze higher or lower depending if it's a top or bottom until you're kind of shaken out of the play. So keep my eyes on that, but overall I like gold and silver. I'm not so much a fan of the gold mining stocks just yet, especially because they are in a pretty strong downtrend still and they've been underperforming. I'd rather get long the actual commodities of gold and silver than underperforming stocks. Now taking a look at silver. Silver has had a nice bounce similar to gold, had these kind of starting to bounce, make lower lows on lighter volume. Overall, yesterday we came up, pierced this previous high, and since then we've seen it pull back. We haven't really seen really strong volume behind the silver move, but it's got nice stair-stepping action moving up. We've been kind of consolidating here, and we've seen lighter volume the past couple trading sessions as price moves down, which is bullish. And the next push would be somewhere around probably the 34.25 area for silver, which brings us up to this. It's a whole number, the 34. It's down trendline resistance, and it's also into these previous pivot levels where you've got a pivot low, consolidation, consolidation, and then this other resistance here. So that would be 34 will be the next key level. I think if it runs here, it's going to go to 34 and then probably have a pause. Now looking at the SP500, I pointed this chart out yesterday, kind of showing you where we were unfolding and how when you get a strong move in the market, you get a run up, and then more or less you'll just see a broadening formation, kind of prices grind higher, and you'll see volatility rise. And that's pretty much where we were yesterday. We've got this nice move up. We're probably going to see prices pull back and start to do this kind of rising volatility move where it'll probably just grind higher over the next few trading sessions and eventually pull back down into this level here where we currently are going forward a week, and from there it could launch another move higher. So overall we're into this play, and I do feel as though it's going to work its way higher, but we're going to see increased volatility, which means we're going to start to see these intraday swings in the market, and it's going to become a little more volatile. And just to kind of show how that's been played out, just looking at the volatility index yesterday. This is a one-day chart. Excuse me. And you can see on the right-hand side, I've switched it from price to actually percentage-wise. And here's yesterday's chart of volatility index. Yesterday we saw the volatility index jump up and continue to work higher throughout the session, up over 9% yesterday with volatility rising, which means we're going to see some choppiness going forward in the next few trading sessions. Anyways, that's it for this morning, and I'll talk to you in a little bit.